Welcome to this class. This is lesson 4 of our SMC trading strategy video series. And today we'll continue from where we stopped last week. Okay. Last class that we had, we spoke about market structure, and we established that price is fractal. That is the way you see higher highs, higher lows, higher highs, higher lows on higher time frame. If you go down to lower time frame, the movement between the higher low to higher high, it may be just one push on higher time frame, but when you go down to lower time frame, it will switch to another higher highs, higher low, higher highs, higher low, higher highs. And distance between higher high now from up to higher low, okay, that's the pullback. It's also going to give you a downtrend. If you understand, to give you a downtrend, to give you a lower low, lower high, lower low, lower high, lower low. So you have to understand this structure that's in between this higher time frame structure. You can call it internal structure. Okay, and some people don't do it that way. Some people see the structure formed in the reversal, in the pullback, as the internal structure, and the structure formed in the impulsive move, that's from higher low to higher high, is now their external structure. It depends on how you want to see it. Okay, just understand how it works. That's the most important thing, because this is the foundation of smart money concepts. Okay, if you have no solid understanding of this, then every other thing you'll be doing will always go south. It's not as if I'm being a prophet of doom right now. I'm just being realistic. Okay, every other thing will not click, or else you are trading from another strategy. But you are trading for SMC, you have to understand that if you don't get market structure right, you don't understand the difference between internal and external market structure. You are trying to long from internal structure to an external structure. It may not work that way. We'll see it clearer when we talk about more theories. Okay, but before I proceed, let me show one more example. Okay, sorry, let me just pick another coin, let me pick another pair. We have overused this USD pairs. Let's just go for something like CHF JPY. CHF JPY. Okay, or should you go to crypto? No, let's just use CHF JPY for today's examples. So let's see trend that we'll have here. Okay, as we can just see directly here, we can see that we have a downtrend, right? From here, we see price have this, or let me just start from this area. Okay, price is very, very long. I just have to start from somewhere. Okay, if I decide to start from here, okay, let's say we have this push down, we have this push up, we have this push down, we have this push up. I'll just from here come up here. Okay, the reason being that this is not really a very clean close. It did not really cleanly close above, so I will not really take it as higher high. I'll just take both of them as high, all of them, both of them together. I'll just take it as a form of equal high. Okay, and I'll have and I'll still have my low here, right? But I'll not see this as low. I'll just see this put as my low. Okay, so I can draw something like this. Okay, this is equal low, this is equal high. They are not really above each other. Then we have it up to this point. Okay, then we have this, then we have this. Okay, so we have this break here, and it broke this low. This is the low, latest higher low as at this point. Okay, so it broke it downward massively, right? And after breaking it massively, it switched all this now. All this structure you are seeing here now is kind of internal structure because it's what we have in the pullback. Okay, all this we have in here is what we call internal structure. Okay, now what I was trying to say is, if you are trying to trade, let's say you just say, okay, it is difficult to explain because we have not really done other theory, but just understand that this is internal. All this happening here is internal structure. Okay, then we have then price broke this place, giving us a lower low. So this is the external structure. It broke this previous low. Okay, and we have another pullback. Okay, inside this pullback we have another structure. Can you see it? Higher highs, higher lows, and this is our internal structure. Okay, then we have a continuation to break this external structure right here. Okay, we have another one. So you have to have this understanding. Okay, we have another one, we have another one, we have another one, like that. Then price finally broke this lower high and change character. Then from here we expect price to start going up. Okay, from here where it changed character, remember. Okay, so from here now we expect price to change and start going up. Okay, and if you look at, you see that that's what price did. Okay, it just started going up. Did this actually break? I didn't think it did. Then we finally broke this structure here, and we have another change of character, so you can see it. And price is now trying to be choppy from here. Okay, because after this it was going down, then it switch again up. When it's switching up and down too fast, then maybe you want to just go sideways. Okay, let's see how it goes, sha. But major thing you have to understand is just the market structure. You have to understand inner structure and external structure, internal and external structure. Okay, all right. Now let's go to the next topic. Now our next topic is like a continuation of market structure. After market structure, the next thing you should always bear in mind why use SMC. After you have marked out your market structure, you have seen your BOS, you have seen your change of character, you have seen your higher highs, higher lows, and all. The next thing now that you want to see is demand and supply. Remember I told you that SMC is all about trading from demand and supply, right? It's all about trading from demand and supply. So what is this demand and supply? What is this demand and supply? Now, from basic economics, we know that when there is demand for something, it simply means that everybody wants to buy it, right? Everybody is looking for it. So those that are able to buy it early, we already have it as the price is going up, because the basic law of chemistry of economics say that the higher the demand, the higher the price. That's the basic law of economics concerning supply and demand. Now, anybody that's able to get something, maybe, for example, let's say you discover somebody that a talent. You just hear someone sing and you feel like, wow, this guy is good. You understand? This guy is good. And you just maneuver him to make a song. You can even buy the whole copyright of the song for yourself. And then you now market it in a very big way that everybody now began to listen to it. That same disc you bought for let's say 50,000. By the time it goes viral, everybody starts hearing it. It may later worth millions of naira. But because you're able to get it, you're able to discover it early and buy it at a very cheap price. By the time everybody's looking for it, everybody wants to buy it, everybody wants to listen to the song. The money that the musician starts making you are going to make a lot from it because you are the one that first invested in it. You understand? I don't know if that's a good explanation, but that's what came to my mind. And I believe you understand what I'm trying to say. So that's what we are trying to do. We want to get into the demand, into to buy something at a cheaper price, having it in mind that the price will go up because more people will be interested because that thing is in a demand area. Everybody wants to buy it. The price is very cheap. Just like somebody should come and say you want to sell iPhone 14, for example, for 150,000. If I should go to GG now and I post an ad that I want to sell iPhone 14 for 150,000, everybody will rush it because it's cheap. So the person that is able to buy it at that 150,000 can sell it at 500,000, depending on what kind of 14X, if it's Pro Max or whatever, and the makeup of it. You understand? So that is exactly what we want to do. We want to enter the price when we believe that it is cheap. And we feel that at that point, more people will want to buy in, but want to be the first to be in, so that by the time more people are buying, the price will keep going up. More people are demanding, the price will keep going up. And at the end, we can sell it at a higher price. Then on the flip side of it, when there's supply, we discover that we know that immediately supply increases, the price begins to drop. That's why in basic chemistry, why does chemistry keep coming to my mind? In basic economics, the higher the supply, the lower the price. So you have something in your stock in your hand, and you feel that this thing, the price will start dropping anytime soon. So you want to sell it as soon as possible before other people realize that this thing might drop. All of them want to sell. Immediately, everybody bring it to the market that, see, I want to sell this thing before the price drop. Automatically, the price start dropping because nobody will be interested in buying it. So you have to reduce the price. You say you want to sell it 10,000, nobody want to buy, and you don't want it to stay in your hand. You will be forced to reduce it to 9. You'll be forced to reduce it to 7. You'll be forced to. So the person that sold his own early made profit, because if he had not sold it early, he would have sold it at a lesser price that he's not interested in. Do you understand that? So that is why we want to buy at demand and want to buy first before every other person, as early as we can, so that when the price rise up, we can just sell it and leave it. And on the flip side of it, we want to sell at the supply zone before every other person starts selling, so that when after the price drop a bit, we can buy it back. That's what's the point. That's what how it is. Okay. Now, how can we recognize this thing on the chart? All this I've been saying this morning is just abstract. There's no any place. You are not buying anything physically. It's just abstract. Now, how can you see this thing on the chart? It's very simple. You can see it from the price movements, the market structure of the price. That's where you can see it. There are indicators that can also help you, but we don't trade with indicators. So that is why we started from market structure. Okay. Now let's say price of something starts at a lower point. At a lower point, let's say this point now is $100. Okay. Let's say this point now is $100. Okay. Now, from the $100 now, it now rose. I don't like the way this thing is showing at all. Yes. Okay. This $100, and the price of $100 all of a sudden just rose up to, let's say, 200. So let's say 200. And because some people just feel like the price can keep going up, because some people just feel like the price can keep going on to 300, 400, 500, they want to buy it at that 200. Now, those that already bought here, that is where they are selling. Because before, buying and selling is what makes market work. If nobody want to buy, there is nothing you can say. If nobody want to sell, so that means some people that have it here are the ones selling. They've already made double of their profit. They want to sell off part at this point. So automatically, since selling is happening, price will start going down. You understand? So since selling is happening, price will start going down. Now, something that was $200 before, it was 100 before and rose to $200. Are you listening? Then it now drop again to, let's say, 120. It now drop again to 120. $120. Automatically in this area, let's say it drop below 100, middle of 100 and 200 will be 150. So it's now dropping below that level. It's just dropping down. Now, as it's dropping, more people will be interested in buying it because it was too high here. People don't want to buy. Instead, they want to sell. So price has to start going down. People don't want to buy here. They want to sell. Nobody is willing to buy because it's too high. Now, price will have to start reducing. Now, when the price reduces to this level, as let's say this 120 now, more people will now be interested in buying. So this point at which more people are interested in buying, you can call it a demand price, a price at which more people are interested in buying. So immediately more people are interested in buying again, according to law of demand and supply, it drops, it move up, right? It will automatically move up. And if it's moving up this time, high chance that it will move higher than how it was before. Because everybody is now used to this $200. It will not be a thing of shock to them again. So it will now rise. That's where we have break of structure. That's why we always say when we have break of structure, that means price is going up. So it's now gone to, let's say, 300 now. Now 300 is too expensive. Nobody is interested in buying again. Okay. From all this, what I want you to get now is that this is the last point where there will demand. People are interested in buying it. It is around this 120. So at this 300, it's too expensive. People don't want to buy again. Price will start dropping. Now, if you drop to this 120, this is the last area of demand that people bought from. So this point is where we call demand zone. Let me delete all this thing now. Now, if I delete all those, we have our break of structure. Can you see it? Now, what this break of structure is that it is around the higher low that more people, that is the last demand where people bought from. And that is where people will still be interested in buying again. That's where we call demand zone. Anything that make price go below this zone, this higher low, and start moving downward, then that means people are not interested. Those that bought before are not interested in buying again. People are not interested in buying. Then the chance of it moving up is very, very low. So it can just start going down like that, or give you a little retrace and continue the downward. Okay. So if you are to look at it technically, after this high, which is the highest last point at which people are no longer interested in buying, from this break of this point now, from this point now, this previous high that was broken till this low, all of it is demand zone. That's the point at which people are now interested in buying because they believe it has come down to what it was before. It has gone below what the price it was before. So from here now to here is our demand zone. That's the demand. But this is a very, very huge zone. It's too big. Now we can reduce it. We have a strategy of reducing it. But first, before we go into that, I want you to understand it. Let me do it again. Now without all the explanation and illustration I made. Let me do it again without the illustration. If price pump up like this, retrace, this place that I traced to is where people bought it, are interested in buying. That's why I started going down. At this high point, people are no longer interested in buying it. That's why I started dropping. Okay. Then this where it saw people, it got interest also of buyers. And that's why you see it pumping. Okay. Now demand zone is the last area at which people bought. Okay. So demand zone now will start from after this place. So demand zone will start from around here, from here to here. That's where we call demand zone. So if you are to draw it out using a box so that you can have it in mind that if price should come into this area, then we are expecting it to pump again. We are expecting new We're expecting new buyers to come in. But where will they come in from? Is it exactly at this point? We don't know. Is it exactly at this point? We don't know. Is it at the extreme end where the last people bought? We don't know. There are more theory that will give us glimpse of where more buyers will be coming in. But all this zone is where we are interested in buying. That's our demand. Now, on the flip side of it, so let me make it a little bit, sorry. Is this still making sense? You can just interact with me on the chat box, okay? Now, let's proceed. So, at this point, let's say people just bought it here and they push up again to break this high, this low and give us a new high, okay? And give us a new high. Then we can say that, all right, from this, then we can say from this place, I want to double it. What are you doing? Sorry, it's my mouse. Sometimes that mouse just do what it likes. All right, so the next demand zone after break of structure will be from this high to this low. That will be our next demand zone. Then when price come inside that demand zone, we are expecting price to pump anywhere from here, right? We are anywhere from this point, this last place to this last, we are expecting price to pump from there. So if we pump from any point and move up, then we have a new demand zone. Then we have a new demand zone, right? We have a new demand zone. And that demand zone will be from that last break of structure, right? From that last break of structure to this lower high. That will be the demand zone. Now, anytime price refuse to bounce inside the demand zone and go below it, then we have a change of character. Then we have what? A change of character. And after change of character, what happens? Demand is no longer in control. From what I've explained so far, what you can deduce is that when price on an uptrend, that means demand is in control. Price continuously respect demands. People are continuously buying at demand zone. And when it pumps up, they sell. When it sells, it reverts again to demand zone. And it pump itself. Because at this high point, nobody's interested in buying. Everybody wants to sell. Price will have to retrace and come to where there is demand. Immediately you get demand, more people are buying inside the demand, it go up again. Now, if you come to demand and nobody is still interested in buying, it will continue going down. And it will change character to what? To bearish. Right? Nobody said anything on the chat box. I want to be sure you guys are enjoying and following up. Okay? So that is break of structure. And that is demand failing. Now, when demand fails, what happens? Exactly opposite of what has been happening before will start happening now. Immediately demand fails. And that's what we'll be having. Now, let's look at it. Let me remove all this. The illustration I gave the other time, in your mind, just flip it around. The illustration I gave the other time, in your mind, flip it around. Okay? Let me just do it separately instead of joining them together. This time it's really fast moving, like it's moving very fastly. Okay, let's say price was on a high point like this. Okay. Then at this low point, it retraces a bit, then move down to break structure. Okay. Price was on a high price. Nobody was interested in buying. It moved down. Some few people are interested in buying. They bought and they just sold again. Immediately they saw little profits. They sold again and it broke down. Now, this is the point at which they sold last. You know that we said that when people are not interested in buying at a high price, and a lot of people are interested in selling, then supply increases. And once the supply increase, price begins to drop. So this is the last point at which supply increase. There are a lot of sellers and little buyers. So that's the last point at which price are the people that just want to like supply and less demand. So that zone now is our supply zone. But it usually start from here. That's the last point at which price broke. Just opposite flip of demand. So it usually start from this area. Okay. So from this price to this price, people are only interested in selling. That's what it means. Then when you reverse into that zone, we expect price to reverse inside the zone. So let's say you reverse from here and move down again to break structure. So immediately break structure, we know that now people are interested only from here to here. Okay. Then price will reverse again. Immediately get to that point. Immediately get to that point where there is demand supply, it reverse again. And that's how it will keep going down like that. Okay. That's how it will keep going down like that. What am I doing? I just got confused. So we have this, right? That's the last break of structure. And inside here, we look to short again. Okay. So that is how it keeps going down. And anytime you eventually come and break this point, inside these supplies, nobody is interested in selling. Everybody is holding that no, I don't want to sell now. I don't want to sell now. Then it breaks this high. That means supply has failed. Immediately supply has failed, then we have a change of character. And we are not expecting it to shift. We are not expecting it to shift towards to start favoring buyers. Now, because some people that are supposed to sell refuse to sell, then price will switch again and start going up. Okay. So that's just the takeaway from this thing. What you should understand is in an uptrend, demand is in control. In a downtrend, supply is in control. Okay. And immediately we have a break of structure. The distance between that, the distance, the range of price between the break of structure and the higher low for uptrend is what is our demand zone. All that zone is our demand zone. Okay. Then if it's going down now, the distance between the lower high and the break of structure is our supply zone, and that's where we are interested in shorting. Now, how does this thing look on the chart? Let's see it on the chart. Let's see it on the chart. It's very, very easy. Let's just start from the structure we mark out now. Okay, you realize that we have break of structure here. So that means from this break of structure, okay, down here is our demand zone. So we don't expect price to go from this high here. We don't expect price to go below this box. If you go below there, then that means people are not interested in buying. Maybe price want to shift again and start going down. Then the next one is this. We have another break of structure from here, right? This is the next break of structure we have from this point, right? You will see that people did not even wait. This one did not even come back into demand zone. That means demand of this is very, very high. It just kept moving up, straight up. You understand? It can happen like that. It's not a must price come back into that zone. People may just feel like this is still very cheap. I want to keep buying. That's why I see keep going up. Okay. Then we have the next break of structure at this point. Okay. This is actually weak, but let's consider it break of structure for the sake of this example. Okay, so we have our zone from this last to this low. You see that now we broke it out to the downside. This is telling you that people are no longer buying inside the demand. Demand are filled. Immediately demand filled, supply takes over. Okay, so we have the next break of structure here. So from this break of structure, high to this higher high here, that's our next supply zone. And when price come back to it, you expect price to reverse before getting to the last extent. And you see that you expected that. Then we have the next one from here. Okay. We have the next one from here, which is also the same thing. Can you see it? That's how it keeps going and going and going. All right. I hope this is very clear. Now, these zones are very wide. We want to try, trading is all about probability. There are a lot of things that can happen. Let me just digress a bit. Now, what makes this price to move is exactly what is going on in the markets. Now, there are a lot of people operating in this market. When we are in demand zone, and a lot of people feel this is a demand zone, a lot of people are started buying. That's when price will keep going up. Now, your work is, how do I know people are going to buy from here? How am I going to know? How will I be sure? This is why we use all these theories. Some people have done all this research and noticed that, okay, if people are buying, this is what we are going to see on the chart. If people are selling, this is what we are going to see on the chart. And that's how we're able to make trades. It's not as if it's this all these blocks we are drawing that is controlling market. No, it's just reducing the probability in our favor. There's a lot of probability. You don't know, somebody can just wake up one morning and say he want to buy inside supply. You cannot stop him. It's his money. So if he has enough money to overcome every other people that are selling, he can buy all their orders in that point. Then price will have no option than to go up. But if he failed to buy all their orders and more people are selling again, then he's going to force it against him and he's going to lose his money. It's just like tug of war. Somebody is trying to drag you to the right, another person is trying to drag you to the left. The most powerful person will win, and the rope will go to his direction. That's how it is. So this demand and supply thing is just like a battle of some people trying to sell, some people trying to buy. So anybody that wins, price goes that way. So we are just trying to reduce, to narrow down this probability. Now, let's say after this break of structure right here that you are seeing downward, we have between here and here to short from. How are we going to know where exactly to short from? Some people don't like stress in their life, all right? They don't like stress at all. Immediately they just see price come back into the box, they just press their short, bam. But now, the thing is, it's not going to give you a very huge area. What if price just keep going up, up, up? You'll be in loss. If you don't have enough money to hold it, you can even liquidate. That's why we now need to look for best areas inside that supply zone where we can short from, and best area inside that demand zone where we can short from. And there's a theory that will help us do this. We have two types of them. Number one is theory of order block. Theory of what? Order block. Okay. Then secondly is we have something that is almost similar to order block, which is what? Breaker block. So we'll be looking at these two things. Okay, we'll be looking at these two things in the next class. Hope you enjoyed this one. If you have questions, as usual, you know how to ask, just direct them to me. Anyhow, you can contact me if you are watching this later in the future. Okay, that'll be all for now. Hope you enjoyed this. See you on the next video. Have a wonderful time.